Good morning. Happy Friday. Good to see everybody. Welcome back to the Daily Grind. I'm your host, Chum Change. This is live and recorded, and we're just going to be going over the news that I missed the past couple days and just some FTX court case stuff that's pretty much been going on all week. So let's see who's in the chat, and then we will get into this. Zapira, what's up, buddy? Good to see you. Chris Hanley, dude, I'm exhausted. He said you look tired. I'm always tired. We got kids. What do you want? All right. It happens. Alvidus, what's up, buddy? Good to see you. And actually, Chris Hanley, I'm pretty sure you have triplets, so I know you know what I'm dealing with over here. All right, let's see who else is here. Overboard Tech, good to see you, buddy. Leo Lustig, my man. Andrew Masad. We have Patty Whack, Miner, Steven Cicero. What's up, buddy? I'm glad you got that X16Q working on unMineable. That is definitely it was a challenge the first time I did it, but I'm glad you figured it out. Sadie, sometimes good to see you. Integra Guy, good to see you as well. Son of a Rabid Panda, love that name, it's hysterical. And Jason Hamilton, TGIG, good to see you as well. All right, anybody else I missed, I apologize, but good to see everybody. Let's get into this, see how the market's looking today. It's kind of a mixed market, not too nothing too crazy, but let's do it. We have Bitcoin 26,851, Ethereum 1548. LTC finally back over 60 bucks, which is nice. 61, so it's up 0.82%. We have BCH 213. XRP is still under 50 cents, 47 cents. BNB is at 205, not too bad. Let's check out crypto bubbles real quick. What is this one? All right, so this is on the week. Everything's pretty red on the week, to be honest, except for this Loom, 59.7%. I'm assuming this was a top 200 coin, and that's why it wasn't on the list, because we look at the top 100 typically. On the day, though, look at this thing, 27%. What the hell is this? Loom Network? Oh yeah, it jumped up 11 ranks. Okay, that makes sense. So yeah, it was top 200 coin. Does anybody know what this is? Loom? I've never I'm gonna have to look into it, actually. I'll take a peek after this, or after we go through the news and stuff. Let's see. Trust Wallet token 3.9%. What else is a big earner on the day? Rune 8.1%. This is Store Chain. Casp is down 2.2%. That's kind of crappy, which stinks for us miners, as you guys know. That's really it, man. I don't see anything else too crazy. LTC up 0.7%. Yeah, nothing too wild. All right, let's check and see. Fear and Greed Index is at 44. Check out the top 10 coins by coin market cap over here. Bitcoin, Ethereum, we have Tether, BNB, XRP, USDC, Lido Staked, Ether, Solana, Cardano, and Dogecoin. Litecoin still in 15th, Shiba still in 18th. Nothing too crazy. And then, like I said, I do want to start looking at this daily if we could, as we are a crypto mining channel, just so we have some sort of time capsule to see what these units were making us, you know, every day, more or less. So most profitable, KS3, 9.4 terahashes, making $111 a day profit. That's crazy. And this is at 10 cents per kilowatt hour, by the way. National average is like 17. So take that as you will. Ice River KS3 is still pretty much on the top on the charts again. So what's the, I really want to know what the difference is. 9.4 terahash. So this is good. Oh, this is 8 terahashes. Oh, okay, gotcha. So I wonder why or how the Ice Rivers is 1.4 terahashes less than the best KS3 over on Bitmain. Kind of interesting. X16P 5.8 gigahashes, $11 a day. Just scroll down a little bit. I want to double check. So the X16Q $3.76 a day. Scroll down here. The X4Q is actually still profitable, which is nice. $1.63 a day. Where's the KS0? Did I already scroll by it? Where is KS0? KS0. Is this way lower? Oh god, it's way down here. It's at 30. It's in the 30th place. That's crazy. $1.11 a day. What do you guys think about this? That's nuts. Anyways, guys, happy Friday. Don't spend all your money on miners. All right, let's get into this. So this is going to be crypto world. We'll start with this, and we'll go from there. This is going to be just talking about the FTX trial, rather, and I guess Caroline Ellison was cross-examined yesterday, and yeah, it was kind of a little bit of a mess, but nothing too crazy. Let's do it. If you guys have any questions, add me in the chat.
Today, blockchain data firm Elliptic ties missing FTX funds to Russian hackers. And former federal prosecutor Daniel Silva breaks down the latest in the trial of Sam Bankman-Fried. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Crypto prices lower again this morning. By noon Eastern, Bitcoin still traded below $27,000. Ether fell more than 1%, trading below 1550, and Solana dropped about 3.5%. Now this comes...
Dan R, no problem. Give me 1 second. Let me throw this up. This is minetheasic.com, by the way. No affiliation. This is just... There you go. Just so I don't forget. All right, let's continue. Sorry.
As data released today reveals costs for consumers here in the U.S. rose more than expected last month. Then there's the latest in the Middle East as the war between Israel and Hamas escalates. The Israeli military said it was preparing for a possible ground assault on Gaza. Okay, let's get to the latest headlines. Blockchain analytics firm Elliptic has a new lead on the millions in crypto stolen from FTX in the midst of its collapse. A total of $477 million were removed from the exchange in the days after it declared bankruptcy, and who exactly moved those funds remained a mystery. Well, Elliptic now says some of those stolen assets have been combined with Bitcoin being laundered by groups tied to Russian hackers. The firm pointed to ransomware gangs and darknet markets as being part of the movement of funds and said evidence points to the involvement of an intermediary in Russia. And keeping with FTX, we're once again closely watching the trial of SBF. Caroline Ellison is back on the stand for a third day of testimony, this time facing cross-examination from Sam Bankman-Fried's defense. Ellison told the court that at times SBF didn't pay much attention to Alameda Research, leaving some of the day-to-day operations to Ellison and a former co-CEO, and then just Ellison when she was named sole CEO. Ellison also told the court that SBF was unaware that longtime FTX customers were still putting money into Alameda's bank account even after FTX's own bank account was put in place. Ellison admitted that she and the former co-CEO could have been better leaders at Alameda. She said she thought about resigning, but obviously that didn't happen. She also talked a bit about her periodic romantic relationship with SBF, saying they limited their communication to Signal after a breakup in the spring of 2022, despite still living in the same Bahamas apartment. By the way, she also revealed she was in a new relationship with a former FTX and Alameda employee at the time of the collapse.
Interesting. All right, hold on 1 second. So I'm reading the chat over here. So B-Lubs is having an issue with this Neoxa wallet. So actually, you know, it's kind of funny because I didn't see anything wrong with my Neoxa wallet until and it really actually I didn't at all see any issues with it, but I went to iNodes. I don't know if you guys know what that is, but iNodes, I had all my Raptorium in there and I honestly forgot all about it. I noticed that they brought on Neoxa for their node system over there, and I ended up sending all of my Neoxa out of my wallet into iNodes, and I had an issue trying to get it out of the wallet. So it was the what was it, the passphrase, I think it's called, that was not working for me for whatever reason. That passphrase didn't work. So what I had to do was I had to re-download the wallet. I had to input my 12-word seed phrase into the new wallet that I just downloaded and re-sync the entire blockchain with a new wallet, and then I just removed the passphrase and was able to send out the funds. So it was kind of a little tricky, but if you want to wait until the end, actually, you know what, B-Lubs, if you can, just message me in Discord and I'll send you the link to download the new the old wallet, I guess it would be, and then you can hopefully try to put your 12-word seed phrase in there to get that funds out. That's what I would do, to be honest. But just reach out to me in chat. All right, let's continue with this. This is Sam Bankman-Fried's trial continues, day 3, Caroline Ellison testimony. It's like a 2-minute video just of somebody that's actually there from crypto world. Let's get into it. If you guys have any questions, obviously at me in the chat.
Hi, Kelly. So we're in a lunch break right now. Cross-examination has kicked off. The defense team still coming up pretty slow. We have not had any fireworks so far. They are jumping around a little bit. It comes after yesterday where they really did not land any of the cross-examination, and for other key witnesses, it's a slow start, Kelly. They are jumping around in terms of the timeline here, and there hasn't really been a clear line of questioning. So we're watching that, but it does not seem that they've really landed any of the questions here. A lot of talk about Signal. So these executives set many of their messages, which is the main way they communicated, these encrypted messaging apps, to auto-delete. So the defense kind of hinting at the fact that some of these conversations we don't have evidence of, that it's Caroline Ellison's word versus Bankman-Fried's defense here. We also learned about another boyfriend that Caroline Ellison had. She was dating Sam Bankman-Fried at some point. During the conversations today in the cross-examination, she talked about another former employee from FTX in Alameda that she was also dating. We didn't get a name. One notable admission, she said they could have been better leaders in terms of the Alameda side, and that Sam Bankman-Fried
She was clearly sleeping with everybody in that Bahamas house.
may not have known about certain issues between bank accounts. There was a sidebar yesterday that we just learned about in the court transcript. The prosecution went up to the judge and said that Sam Bankman-Fried was reacting to certain comments that Caroline Ellison made. He was laughing at certain points. And the judge scolded the defense team and said, you need to speak to your client about that. It could affect the jury. It could affect the witness. And so some tense words from the judge saying, basically, talk to your client and tell him to stop reacting. That is something that went on yesterday, but we're just finding out about today, Kelly. But we'll bring you any updates as we get them.
Wow, Kate, thank you very much. A saga indeed. Kate Rooney reporting.
Appreciate Kate Rooney and CNBC television for that. All right, let me hold on one second. Let me just get my two-factor authentication open. I want to show you guys this iNodes thing, just because why not? It's not a huge deal if I show you guys. All right, let me get this open. So the reason I did this into iNodes was because this is for my Neoxa, by the way, if anybody's just joining. So I guess the Neoxa wallet has been having issues, but I didn't know that when I started doing this. Well, decided to do this rather, to send all my stuff over to iNodes. Let me see. Hold on. Actually, no, I don't even have to show you guys. Let me see. Just go to the dashboard. So this is more or less what it is. So you can, all right, so iNodes right here. Look, I'm going to put this in the chat. All right, so this is iNodes. They have Reptorium, Firo, and Neoxa. So you guys can more or less pool. It's kind of like a Titan node for Flux, right? You kind of pool all your shit together. They create a node, and you guys get the proceeds of whatever. So if I go to my stats, so basically I'm earning, it says estimated daily earnings $1.43 a day. Let me zoom in a little bit. Sorry, I get the hiccups. $1.43 a day. Total pending right now. You can see I've made $6.61. This is how much I put in, like 340,000 Neoxa or something. $907, I guess, the total collateral, right? But I'm making money on this Neoxa just sitting here. And typically, if it's just in your core wallet, I wouldn't have that. So I was like, what do I care what they take for a fee? It doesn't make a difference to me. It's just sitting in a core wallet that's super dangerous to have anyways, because I just hate core wallets. There's always issues with them, right? So I had an issue with my passphrase trying to get the funds out the first time. I had to go in on another PC, download the Neoxa wallet, import my 12-word seed phrase, get the blockchain synced again, and then I was able to take my funds out because it kept saying my passphrase was wrong, which was written down, and I know for a fact it wasn't wrong because I've taken money out or put Neoxa in there before with that passphrase. So regardless, this iNodes thing is a good option. If you guys are interested, feel free. They have a Discord and stuff. You guys click read more. It'll send you a link to their Discord, but whatever. I can't send you that link personally because it doesn't work like that. Unfortunately, they have like invites shut off. So whatever. Hopefully that helps you guys out. If you guys have any issues, obviously just let me know. But yeah, anyways, all right, let's get into this. How likely is a recession in 2024? This is a video from Altcoin Daily that I didn't have a chance to watch. I'm just going to make sure I liked all these videos real quick. Guys, hit that like button. Appreciate you. Yeah, so I want to know what this guy has to say about the recession coming up. Hopefully, hopefully this will give us some good information because I didn't have a chance to watch it. So if you guys have any questions, at me in the chat. Let's get into it.
And doing that is normally what pushes us into a recession.
Today, I interview quant analyst Benjamin Cowan, and I ask him the tough questions. If a recession happens, how deep? What does that mean for the S&P? And what does that mean for Bitcoin? And while we start by discussing macro, meaning inflation, interest rates, the yield curve, all that tailors into crypto and how that all affects Bitcoin. At what price of Bitcoin do you become a buyer?
That is my main concern right now, is that...
Oh my God, I just remembered, dude. Last night I had a dream that Bitcoin dropped down to 6K. I swear to God. That's hysterical. I literally just remembered that. And B-Lubs, thank you so much for the $25 Canadian super chat. You didn't have to do that, buddy. I appreciate it. But yeah, just hit me up in Discord if you have any issues or if you need help with it.
If Bitcoin...
Like the video, send this to a friend, and let's start. What are your general thoughts on the market right now? And let's just jump right in, man. Are we headed into a financial crisis? Be real.
Look, I mean, recessions are something that everyone talks about and, has been talking about for a long time. And I think there's good reason for that. There are a lot of macro indicators that suggest some weakening in certain areas, but there's also some other areas that have remained quite resilient. But one of the things that everyone has sort of cited for a long time is of course the Treasury yield curve. And the reason we look at this is because it's kind of like in crypto, right? If you were to lock up something for a month versus locking it up for a year, you would expect to get a higher yield if you locked it up for a year, right? Because you're sort of taking on more risk, you're locking up your funds for longer. But you can see the Treasury yield curve, you're actually getting a higher annualized yield at the short end of the curve rather than the long end of the curve. So this kind of tells us to some degree that the economy is somewhat sick, right? It tells us it's somewhat sick. And the reason why this yield curve is we should pay attention to it is because, if you scroll back through time and look at how the yield curve, this is what it normally looks like, right? So this is what the yield curve would look like in normal economic times, right? When, the short end of the curve, you're getting a lower interest rate than the long end of the curve. Back before the financial crisis, we had an inverted yield curve, right? And it looked like this. Back before the dot-com crash, we had an inverted yield curve. And you can go back in time and look at all sorts of prior examples where we had an inverted yield curve, which ultimately led to a recession. Now, the fascinating thing right now is that we are getting a bear steepener as opposed to a bull steepener. So a bear steepener is when the uninversion process is starting. Well, we don't know if it's going to fully uninvert yet or not, but the uninversion process is starting not because the short end of the yield curve is going down, which would be indicative of the Fed cutting rates, but we're seeing the uninversion process because the long end of the yield curve is going up. So that's known as a bear steepener. A bull steepener, again, is when the short end goes down. And the reason it's called a bull steepener when the short end goes down is because the implication is that the Fed is cutting rates. And if the Fed is cutting rates, that's bullish for the economy because then the cost to borrow money becomes cheaper, right? It might not be bullish for the stock market in the very, very short term, but oftentimes, sometimes shortly after Fed starts cutting rates, the stock market will bottom and then sort of go off into another secular bull market. So we have to look at the yield curve. And if you look at the spread on Treasury on say the 3-month and the 10-year, right? This is what it looks like. This goes all the way back to the 1960s. Okay. So it's still loading. But here it is. So we have this going all the way back to the 1960s. And you can see that anytime this goes below zero, it represents an inversion of the 3-month and the 10-year yield. And the last few recessions have occurred after the uninversion process, right? So like look at 2000, 2001, we saw the inverted yield curve, 3-month and the 10-year spread was inverted. And then after the uninversion, recession. Same thing over here before the financial crisis, right? After uninversion, recession. And you can go back and look at many other business cycles. And the truth is like neither you or I have really experienced a full business cycle because we were just simply too young, right? We were not old enough really to, we were, as I've said, right, our biggest mistake during the dot-com crash is that we were only like 10 years old, right? Like we weren't able to go up and buy all these tech stocks that were down so much. If you go back to like the 1970s, what you'll see is that we actually started some of the recessions while the yield curve was still inverted. And I think one of the reasons for that actually is because during periods of high inflation, the reaction function by the Federal Reserve is a lot different, right? So they're going to be a lot more hawkish because their mandate is to bring, is for price stability. And so they might not be as quick to pivot as they normally would be. And in those cases, you can often get recessions before the yield curve even uninverts. So that's sort of the initial thing. And I can talk about a few other metrics as well, but that's the initial thing that we're looking at here, because if you look at what's going on right now, it seems like the uninversion process could be well underway.
Which is good.
Well,
Right.
I mean, it means we're likely getting closer to the end of the business cycle where we can sort of start anew, right? Where we're getting closer to the point where the Fed starts to cut rates, but we're still arguably not there yet, right? The Fed's not going to cut with the market the way it is. I mean, the S&P is still above, it's like 4,300, I think, at the time that we're recording this. The Fed's not that concerned. And the labor market, right? The unemployment rate just came in today at 3.8%. And non-farm payroll beat expectations, I think, by almost double. So the labor market at this point is still resilient. So the Fed really has no incentive to cut rates, over the next couple of months, notwithstanding some type of major market crash.
And inflation's still super sticky, which obviously markets high, unemployment up, or employment up, all those things contribute to it. So yeah, what are some of these other charts?
Yeah, you're right. Inflation is up. This is headline inflation. And again, their target is to get to 2%. But Powell's talked about that last percent is the hardest percent to get, right? To go from 3 to 4% down to 2%, it's really difficult to do that. And doing that is normally what pushes us into a recession. The recessions are awful in the sense that people get laid off. But one of the things that recessions also do is they actually sort of bring inflation back down to earth. One of the reasons why the labor market has been as resilient as it has been is look at this chart. So this shows job openings, okay, total non-farm job openings. And you can see that there was a pretty well-defined trend here coming out of the financial crisis where we were just sort of job openings were slowly going up. And then here's the pandemic drop, right? But look at what happened after the pandemic or during the pandemic when all that money printing occurred. Tons of job openings, right? The cost to borrow was so cheap. The cost of cash was cheap. And so a lot of people just wanted to hire and grow as quickly as they could. And so we ended up topping out over here at around 12 million job openings, which
well, no, that was mostly because also like everybody that when they started printing all of that money, everybody that got, laid off from the initial, I guess pandemic when everybody was freaking out, you're going to get sick. They should have shut down public businesses and all that. It ended up making people want to stay home because, to be honest, like I saw it happen with my guys that worked for me. They were making more money to stay at home and just collect unemployment because they were getting their whatever it was like a percentage of your weekly pay, right, from unemployment on top of like an extra $600 plus per week. It was absurd. Like trying to get people to go back to work was crazy. It was just every excuse under the book of why not to do it.
By the way, before the pandemic, we were only at around 7 million job openings. So when you look at this chart,
so that would be why all the job openings were there, right? That would make sense, wouldn't it? Because nobody was going back to work. Like everybody needed to hire somebody.
What you'll see over the last couple of years is that job openings have been coming down, but it hasn't yet had a material impact on the labor market because the starting point was just so high, right? There was so much excess to really get out of the system. And so, those calling for a soft landing, which, again, it is a possibility, right? Like we should entertain all scenarios, right? The people calling for a soft landing, I suppose, are sort of hoping that we maintain the integrity of the prior trend where, this bounce is ultimately sustained and we don't really see job openings go too much lower than where they currently are. The counterpoint, of course, is that, we've seen this stochastic process of just sort of moving down for a few months and getting another 1 to 2 months where we go back up to the upside, but then it keeps going down. And as long as the Fed continues to hold rates higher for longer, then I think the expectation would be that job openings would continue to sort of slowly dwindle down. And one interesting way to sort of quantify this is to look at, so we made a risk metric for job openings to sort of account for prior movements in the market. And if you look, this is job openings risk metric, right? So you can see the gray shaded region and the blue line is the S&P 500, but the gray shaded region is where recessions have historically occurred. And then the green line is the risk on job openings, right? So you can see that it's been going up recently. The last print, it actually came down some because the job openings went back up. But the reason why this is useful to look at is because after the job openings risk goes up, it's normally sometime after that the unemployment data starts to show weakness, right? So you can see over here in March of 2001, job openings risk was going up, and it wasn't until 3 or 4 months later, maybe even 4 to 5 months later, this was March till August. So really, like 5 months later, it took until the labor market started to really show weakness, and that's what ultimately brought the recession. Same thing over here, right? Job openings risk went up first, then the labor market showed weakness. In 2020, they more or less went up at the same time, but that was, an event that is very different from, most business cycles that we've seen. And I think that's the thing we have to look at, right? The unemployment risk is still relatively low, but we know that when it starts to move, it can move relatively quickly.
Yeah, Yankee in the chat saying you think the market's bad now, wait until a real war breaks out, which is, you know, the stuff that's happened overseas is it's terrible. It's so terrible that it's going to affect everybody in the world at some point. And yeah, I don't think you're wrong at all, to be honest.
So your message today is that we're not in a recession. Some people in the comment section speculate that we are,
Not yet.
but based on the metrics, a recession could come as early as when?
Yeah, so I've been of the opinion, and I think I've said this for, you know, for basically the entire year. And even in 2022, there was a lot of people saying that because there's the 2 consecutive quarters of negative GDP, right? We did have that in 2022, and a lot of people use that definition. And if you use that definition, then you could say that we had a recession in early 2022. I think the hard part for calling that a recession is that recessions normally occur when the labor market is showing weakness, not when we're at 50-year lows in the unemployment rate. And if you were to look at something like initial claims, we're still looking at a relatively low level here on initial claims. Do note, though, that last year initial claims bottomed out in September, and maybe we're seeing the same thing here again in September, initial claims bottoming out, meaning they could start going back up. But I think the earliest we could, and I've said this for a long time, I think the earliest is sort of the end of the year. It could happen early next year as well, I think is where the risk could come in. And I think one of the reasons that could happen is if the long end of the yield curve continues to go up, right? So we were talking about that earlier. If the long end of the yield curve continues to go up, then it makes the cost of capital, it's more expensive to borrow. That could lead to people reducing expenses, which could then in turn lead to an economic slowdown. And therefore, rather than the continuation of the bear steepener, it could turn into a bull steepener where the Fed has to cut rates because we're leading into a recession. So, if you think about it, 2020, we had a recession in Q1, right? Again, pandemic, black swan type event. But 2016, late 2015, 2016, we did not have a recession in the United States, but we came close to one, right? So, you're in crypto, right?
Well, like Techman says in the chat, he said, we're in a recession, or we've been in a recession. They just redefined the meaning, which is, you're not wrong. I don't think you're wrong at all.
There's a lot of seasonality related to markets and cyclical behavior. So I do think there is certainly a risk of a recession in 2024. And it could occur later this year as well. It depends on all sorts of things, right? I mean, if you look at some of the prior market behavior, like look at 1987, look at what happened in 1987. This drop right here by the S&P 500, that occurred in October, right? This drop here, this was October of a pre-election year and also the Fed pivoted in 1987 as well. So it's certainly possible that the Fed pivots this year, but it would take something like that. It would take like a 20-30% drop in the S&P, I think, for something like that to happen. So my guess is the most likely outcome is the market continues to adjust to higher and higher rates. Equity markets slowly price that in, and eventually it likely ushers in a recession. No guarantees about that. There have been soft landings in the past. Just as one counterexample, just to provide one. If you look at the yield curve, I would be remiss if I didn't at least mention this. There was a period over here. You can look at 1966. We had an inverted yield curve right here, a very brief inversion, and we didn't get a recession. Right now, we got a recession a couple years later, which led the S&P to new lows, and then another recession a few years after that, which then again led the S&P again to new lows once again. But we did not get one immediately, although the inversion was not nearly as much as it is today. So when I look at this, I have to say there's a lag, right? There's a lag on this stuff, and just one of the last charts I want to show on this is this chart. This shows the S&P 500. Return on investment too low after inversion of the 3-month and the 10-year yield. And it's kind of messy when you look at it like this, but look at this business cycle and then look at, say, 1973, right? Look at this business cycle compared to the financial crisis, right? It's not that different from what we have historically seen it. And I don't necessarily think that it's going to play out as badly as it did over here. But you can kind of see that there's a process to this stuff, right? It doesn't just play out overnight, even though I know a lot of us would want to see it play out overnight. Look at this one. This was 1979 to 1980. after yield curve inversion. And we were climbing the wall of worry for a long time. And then the labor market showed weakness. And then that's when the S&P just collapsed and went down to put in a new low. So, I think all that's important. And of course, if the S&P were to drop significantly, that of course could have adverse effects on the crypto market.
By the way, if you want access to these charts at home, I'm going to put an affiliate link down below, 10% off with the Altcoin Daily affiliate link. And I love how much information, especially Ben, when you come on and provide that perspective. My question to you is, if a recession happens, how deep, or what does that mean for the S&P, and what does that mean for Bitcoin?
It's a great question, right? So normally, what it means for the S&P, right? I can speak to what normally happens. Normally, it means new lows, right? And it doesn't have to be a significantly lower low. Again, if you go look at 1966, we didn't get a new low because we didn't get a recession, right? So it kind of depends on if we get a recession or not. During the S&P puts in a new low. That's what historically happens, of course, during a recession. I want to show you this chart. This is the ROI of the S&P during all these prior bear markets that we were mentioning. This is the current cycle. And of course, this assumes that the low is not in. If the low is in, then the bear market, you could argue that it already ended, right? Back in late 2022. We only continue to follow this in case there is a lower low. And then it sort of brings up the question, well, is there precedent for it taking this long before another lower low is achieved? And there's a few examples. If you look at 1973 to 1974, it was actually around this time when the S&P sort of put in its final low, which was a lower low. And that was also during a period of high inflation. But there's another one that might be a little bit a better comparison. And that's the one from 1946 to 1949. The reason why that one's interesting is because we just came out of World War II. And this time we had the pandemic, but they both caused a very similar thing to occur. And that's a lot of money printing, right? You had to finance the war, or you were trying to save the economy from the pandemic. So it led to a lot of money printing, and we just went through an inflationary cycle. You can see over here that the S&P 500 just kind of had all these rallies, right? And this was a really significant rally over here too by the S&P off of these lows. It didn't stop it from putting in a new low 1,111 days. 1111, right? What are the chances, right? But 1,111 days after the whole thing began, it still put in a new low all those years later. And if the S&P were to do something like that today, then it could mean going just slightly below the prior low, right? Because the prior low was right 3490, so it could mean going to 3300 or 3400 or something like that. So I think we should be open-minded to an outcome where it's a slightly lower low. Of course, it could turn into a hard landing where the S&P goes a lot lower. But I think it's going to really depend on a lot of things. And of course, I don't know the answer to exactly how low it could go, but I think we should be at least prepared for that outcome, especially considering that historically recessions often lead to a lower low in the S&P 500.
Let's just look at Bitcoin. Just in today, what's Bitcoin's next move based on the charts?
I don't know who said it in the chat, but somebody said this is a lot of words just to tell you to DCA into Bitcoin. I don't think you're wrong either.
Right now Bitcoin is at, it's right around $28,000. I've sort of been of the opinion for a while that we would get this rally. And the reason for that is because that's kind of what normally happens when we get a death cross, right? So when you get and I know the death cross always sounds very sensationalist, and I wish there was another word for it. Maybe I could try to.
Real quick, Tip Top Smoke in the chat said a retail level we are seeing the strictest spending I have seen in a decade and a half. He said Bitcoin may drop below 20K by Christmas, in my opinion. And I would be, man, how many of you guys would be buying Bitcoin under, I guess, would you be nervous to buy Bitcoin at 20K, or do you think it would go lower if it actually did get below 20K at this point? Let me know what you guys think about that in the chat. And yeah, hit that like button. Appreciate you, Leo Lustig.
To popularize one, but that's just what people call it, right? It's when the 50-day SMA goes below the 200-day SMA. And oftentimes what happens is you sort of sell off.
I'll put a poll in the chat.
Just before it, people see the headline death cross, and then the market pumps right out of the death cross because they're lagging indicators, right? When you get a death cross, it just means that the price has already gone down. If a shorter term moving average is going to go below a longer term moving average, it just means the price has already gone down. But what I'm looking at here with Bitcoin is what normally happens. Not always, but what normally happens is when you get a golden cross, like back over here in February, you sell off into the golden cross, but the overall trend up remains the same, right? So that's what we saw, right? We had a golden cross. Initially, we got a sell-off, but the overall trend remained to the upside. This time, we got a death cross. I'm arguing that we should be prepared for an outcome where in the short term, we rally into the death cross, right? We're actually at the 200-day SMA right now, right around 28K. But what if the overall trend remains intact of a slight downtrend? That's exactly what we saw in 2019, in fact, was a death cross, a rally into that death cross, followed by a lower low in November, right? And so that is my main concern right now, is that if
and then a total shit right there where it just kind of completely dumped.
Bitcoin takes out that prior June low of 24.8K, let's say if it goes down to 22K or 23K, my worry is, you know, where does that leave the altcoin market? Because there's very little liquidity right now in the cryptoverse. And I think the altcoin market, you know, and I've said this many times. I know I've come on your channel for the last year and a half, and we've been talking about how risky altcoins are. And yes, like I do want to say to your audience, like I am fully aware that some altcoins have done well, and that's always what happens, right? There's always a few, right? There's always a few that do well, but most of them have not, right? Most of them have bled significantly, and you know, just to
Caspa and Dynex being two of the altcoins that have done pretty good in the bear market, at least in my opinion, for GPU miners anyways, right? Or miners in general.
Yeah, can I take a minute to just kind of give a few examples?
Please, wait. Before we get to altcoins, can I ask one question?
Sure.
At what price of Bitcoin do you become a buyer? I know you've been nibbling this year, but what do you have to see, what metrics wise or price level wise, for you to be a buyer?
So I normally look at the risk levels. So there's a couple of them that we can look at actually that I think are relevant. So one of them is, let's see if we can find it. It is this one right here. So
this site's called Into the Cryptoverse. I've never heard of it. This must be his own thing. This guy, Benjamin.
I've been doing this cycle is I just DCA when this is below 0.4 risk. Currently, the risk is 0.484. So it's a little bit too high for me to be interested right now. But I did pick some up late last year and early, maybe a little bit early this year, but that is mostly what I've gotten. And I haven't bought any altcoins, right? So I've missed out on all the altcoin rallies, but I've also feel like I've preserved my capital because a lot of these altcoins have just not really gone anywhere. So this is one metric I look at. And I'm curious if it's going to play out like how 2019 did, right? Where we went to a low risk level, then we came back up here, and then we sort of just slowly faded down. This was a recession, by the way, right? When we got another blue dot, you know, when we went back to these lower risk levels. There's another one that we can look at. This one is the total risk. And this is built on the price risk, the on-chain risk, and the social risk. And I think I've spoken, you know, to your audience before and you about the social risk. And in fact, one of the reasons the social risk has remained so resilient is because of how many views your YouTube channel gets. You're a very popular person in the cryptoverse. But this is what this metric looks like, right? The total risk. And so you can kind of see that this risk metric is relatively low. But if we see, you know, sort of a taking out those June lows, then that could take you down to these lower risk bands. And I think, and I've said this a long time, right? Like DCA Bitcoin is usually the best strategy, right? Like DCAing Bitcoin over a long enough period of time, especially when the risk levels are low, right? I mean, even at 28K, as long as you have a long enough time frame in mind, you're probably going to be fine, right? It's where the danger comes in is people who buy, and then if they're going to then sell it, if there's a sharp sell-off down to say 20K or something, and then they sell that after buying the local top, do they sell at local bottom? That's where it becomes dangerous. So it depends on what your time frame is, right? One interesting way to look at this is to color code this. And what I like to do is isolate everything but the lowest risk band. And you can kind of see what it looks like right now, right? Like every pre-halving year, we hit the lowest.
That was kind of cool, actually. Being able to change the chart up like that. That was really neat.
Risk band at some point, right? This was 2011. lowest risk band. 2015, lowest risk band. 2019, we were at the lowest risk band. We haven't hit it yet this cycle. It doesn't mean that we will. And by the way, we could go to the lower risk band even if Bitcoin is not at a lower low, right? It's just because the idea is that there's adoption in the cryptoverse, and the longer we go on, the fair value goes up. It's like looking at this chart right here, the total market cap and trend line, right? We talked.
That's what I was just gonna say. We're still in this trend. When that lower portion happens, I wonder if it will happen, if it's just at this bottom line right here at this trend line, or if it will go below, because it's never gone below this trend line right here. So I guess we'll have to see.
About the beauty of mathematics video series on my channel, but it's basically the idea is that the red line represents the fair value of the asset class. And we go through periods of undervaluation and overvaluation. And what's fascinating is that total market cap has gone sideways for the last 16 months? Does it feel like it's gone sideways? For a lot of altcoins, they've gone down. The reason total market cap has gone up is because the reason why total market cap has gone sideways, even though alts went down, is because Bitcoin went up. So when you isolate it like that and you overlay the total summary risk that we were just looking at onto this chart, right? And then we just simply look at the lower risk band. This is what it looks like, right? So you can clearly see the more optimal times to buy just before a major uptrend. If you
shout out to Ben, because this is crazy. This is his own website. That's a crazy I guess charting strategy that you can change things like that. That's nuts.
At another risk band, the 0.1 to 0.2, you can see that we've already been in it, right? It doesn't mean that it doesn't mean that Bitcoin can't go to 23K. It could, and I think it probably will, given enough time. But that is what I would look for. So I would look for, just lower risk levels. And by the way, I mean, what I normally do is I just set limit orders at the risk levels. So if one of them gets filled, or at least that's what I did late last year, if the price goes down to a certain risk level, then I'll pick some up and then I'll just wait, right? And I think one thing that people should consider is that if you really like something, you should not fear lower prices. Like if you're really bullish on it, right? If you think that Bitcoin will eventually win out and go to much higher prices, you should not fear lower prices because it just gives you opportunity. It's like if you go to the store and you want to buy something, in the store, you're not put off if it's on sale, right? Like it's more enticing to you, not less enticing. So hopefully people can see it that way. But again, I mean, maybe this would be a point to segue into the altcoin market, because if Bitcoin does sort of see a sell-off in November or October sometime, let's say between now and the end of the year, then that could usher in some lower prices on the altcoins.
Another interview drops very soon.
Pretty awesome. Shout out to Altcoin Daily and Ben Cohen for that little interview there. It's kind of crazy though to think about Bitcoin possibly dropping down to like, I don't know, he said 23K, right? So 23, 20K. It's just crazy. I mean, right now it's 26, right? The amount of people that will panic versus just DCA in is probably going to be absurd. Like the big guys that have a lot of money that really do remove their emotions will be buying all day long as soon as this thing goes down near 20K. But the average Joe is going to be super nervous about getting in, and that's when people lose. They panic and they sell. And that's when you get screwed. But either way, I think overall we've been in a recession. They just again did change the terminology of it, and they're just trying to push it off and I don't know, I guess glide to the next year and see what happens. But either way, I'm not a politics guy. I don't deal with any of that stuff. So whatever, let's just deal with crypto mining and have a good day. I know things are getting a little feisty in the chat. Kazuma, I apologize, but I don't know what you're talking about. Anyways, guys, all right. Hopefully you guys have a good, happy Friday. It's payday for most of you guys. I'll see you guys bright and early tomorrow morning, 9 a.m. Eastern Standard Time. And yeah, we'll go from there. So enjoy your day, and I'll catch you guys in the next one. Peace out.